The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Another volatile week in the commodity markets, a mostly down day / mixed day on Friday in grains and livestock. Plenty to unpack, a lot of things to take a look at here. What is on the minds of traders and farmers for that matter as we head through the weekend and into next week. Joining us to discuss the week in the trade, we welcome in our good friend DuWayne Bosse with Bolt Marketing in Britton, South Dakota. DuWayne, thanks for joining us here on Market Talk today. And you and I were joking off air, but what a wild week. I feel like I broke a record. I've said volatile week after volatile week, but I mean, this past week was no exception to that. What a week it was, DuWayne.
What a week. I think a great summary to that is when I think a week ago today, if you would have had me on, I would have said there's just no bullish news in corn. The most bullish thing I can tell you about corn is that it's oversold. And that's not really a bullish story. That's just a technical thing. And I was dead serious. And then this week happens.
Yeah, and then this week happens. And there was a lot that happened here this week. I mean, just everything from the weather, and I know that that's a factor still, even though we got some new forecasts out that maybe disagree and say August could be cooler and wetter from NOAA, but weather's on one hand, the Black Sea issues are on the other hand here, DuWayne. And I think I'll throw in maybe the outside markets in the middle with the dollar, et cetera, crude oil. That's kind of an arbitrary factor. It seems like weather and war are the two big things here this week, DuWayne.
Yeah, if we back up, so Sunday night going into Monday, that's when the Russia-Ukraine Black Sea export corridor was set to expire, right? And I think that had happened, 3 or 4 times we had those set to expire. And all the other times before, Russia would threaten they're going to leave, and they wouldn't. They would keep it going because they really needed open as well. Well, sure enough, this time when none of us gave it any credit, Russia stepped out of the Black Sea grain export deal. And then not only did they do that, which is a fun, sexy headline, right? For the algos trading. But then they also started to bomb the Odessa port, which is, also a very big headline for the algo traders. And I've mentioned the algo traders a couple times because I think that's what happened this week, Jesse, is they're programmed. This is just a program that trades commodities to take bits and pieces of a headline or like a US report. They just take bits and pieces, keywords, and either buy or sell the market, thinking that they're going to get in before the rest of us. This week was, some bullish headlines out of Russia, Ukraine. You bomb a port that sends food out, right? That's a big deal. I mean, at least on a headline basis. And I think that's what really drove it up. But on the second point you mentioned, it is a hot, dry forecast for next week. And the futures market always trades the forecast, not the actual event or the weather this week. So that helped to push corn up too as well. But 90 cents higher, maybe a little bit too far. And then today, profit taking, position squaring. You could tell it right from the start this morning. We actually were down about 10 to 12 to 15 early this morning during the night trade session. Day's trade session opens up where the managed funds trade, and we instantly go to unchanged. And I think that was funds that were short saying, I don't want to be short this crazy weekend we have coming up where Russia could either continue bombing or knowing Russia, they'll probably sign some agreement with Turkey and open up the grain export corridor again. So rambled there, but that's like everything in a nutshell. What a crazy week.
Well, a lot there with the Black Sea issues, and we've heard now reports Russia's been posturing a little bit against Poland, which that would not be good at all, Poland, a NATO member. So, I mean, there's, I guess the best way to sum this up is there's a lot of unknown in the Black Sea region right now. And, I think about how does China play into all this too? And we think about demand and our ugly demand picture in the U.S. Well, China gets plenty of Ukrainian corn. Will that push China to South America now for more corn? Could it open up U.S. corn exports to China. I've heard that they might be sniffing around the PNW a little bit for corn and beans. So, I mean, that's something else to kind of take into account with this whole Black Sea situation is what is China's place in this?
You had a really interesting point there, the uncertainty in the market. And you just named off like 14 different headlines there that created uncertainty. And when you have uncertainty in the market, especially during our growing season, we go higher. And that's a great point. I'm glad you brought that up. But as far as China in this deal, yeah, they're a major buyer, right? So they want to buy corn out of Ukraine. They're by far the biggest buyer of corn out of Ukraine. I don't think this makes them happy, right? And they're supposed to be Russia's biggest ally, and they've been supporting Russia and saying, everyone kind of back off. This is all justified what they're doing. I'm curious if Big Brother isn't going to be a little torqued off about some of this bombing. And that's why I also feel like we could flip next week and all of a sudden there is an export corridor open again because Big Brother wants that corn out of Ukraine. So, yeah, a lot of interesting storylines there. We're just hitting the tip of the iceberg on them.
Well, corn and soybeans specifically here, DuWayne. Obviously, you alluded to this profit taking on Friday. Farmers selling, I have to think that has got to be something we're seeing here as well, just with that profit taking, not just algo fund trading, but farmers getting in there and saying, all right, I've missed out on the last how many rallies. I should do something here. Is that kind of what you're hearing maybe in this trade right now, quarter beans?
A little bit. It's funny. We've talked for about 5 minutes in this interview, and we haven't mentioned supply and demand for the U.S. at all.
Yeah.
But if we do, and we go back to talking that, I'm going to tell you that with a 2.2 billion bushel carryout expected in corn, do we have any business being above $5 on the board? And the answer is no, we really don't, especially when you consider the crop size coming in South America and Brazil. You also mentioned China pushing to buy somewhere else. Brazil is the number one place they're going to look at. Now, because it's been a bullish week, we don't get a lot of the bearish headlines mixed in there, right? Or we push them aside anyway. But this week, we've heard a lot of talk of South America corn crop size getting larger and bigger. So that may be mentioned next week, and that's where China would look to buy. So yeah, the fundamentals are bearish, and yeah, I think there's got to be some farmer selling here. But I don't know, through this office, the farmer selling has been a little light because we're all just so darn confused right now.
Well, and that's a great point that I think we should talk about is a little bit of confusion. You think about the weather and the supply side of the equation here in the U.S., and I can understand some hesitancy from farmers if they don't know how much of a corn crop they're going to have this year or how much of a soybean crop, and they're maybe a little hesitant to, buy a put, sell a call, create a hedge position, whatever the case may be, not make a cash sale, but do something on the board. They're just a little hesitant to do so. So, I mean, I totally understand things from that perspective, DuWayne.
I do too. And, when I hear a producer's hesitant to sell, being a broker that I am and doing it for too long already, it seems like my first thought is well, just sell the board. That's why you don't do cash, because you're not sure how much you've got. Well, if you sold the board last week, because someone like me was bearish, man, you just got ran over pretty hard. And I understand, a hedge is a hedge. If you're losing money in your hedge account, you're gaining that much in the field, in the cash value, right? That's true, but you're not selling it, so you don't generate any cash. Margin calls are emotional. Funds and futures are emotional. I get it. It's hard for producers. I think every day they need to go in and look, okay, where am I at right now? And look moving forward, Jesse. Don't ever look at back and what I did wrong, because you'll probably eat yourself up. If you got here and you've only got 20% sold, boy, I think you can get more sold. When have we not raised a half a crop? Or talk to your elevator about, what happens if I can't deliver? Can you roll it to next year? They probably have options for you. And then look at, put options with a broker like me. That's the good thing about this late summer rally, Jesse, is that put options aren't that bad. 30 to 34 cents buys you an at the money corn put, or even in the money slightly. That's not bad at all. I think it's more like 24 cents even for a lot of them. So, you buy a put option, then you got that upside yet. But I would protect the floor on this corn market because, man, fundamentals don't look good, if I can go back to that again.
Fundamentals look a little better in the soybean complex, so don't they, DuWayne?
They look a lot better because that's where we lost the acres, right? So, and August is still a huge weather month for the soybean crop, either bullish or bearish. Now, right now, it looks a little bullish. Now, that's the forecast. But like you had mentioned earlier in the interview, NOAA came out this week with their forecast, their 30-day outlook, so their month of August, actually below normal temps and above normal precip for the key areas in the Midwest. So, and that does correlate with El Nino, of course, which we're in. So if maybe we just have a hot couple days here to end out July to average out the temps in July, because remember, we've been colder than normal up to this point, and then maybe August is cool and damp. Well, if that's the case, then soybeans don't have a reason to be above $14. Totally justified the rally this week because of the hot, dry forecast, but it's got to continue, Jesse, if we're going to keep this rally going off these, highs for the year, basically, for beans.
We're having a conversation today with DuWayne Bosse from Bolt Marketing as we continue to recap the week in the market trade. And DuWayne, wheat markets, they seem like they've been the most impacted one way or another by what's going on in the Black Sea region. But, you got to think about this as well, the supply side for wheat. We have some production issues here in the U.S., whether it be delayed KC wheat harvest and poor crop there already in many areas. Spring wheat crop, some areas not looking too good, small, it's headed out already. It's just looking rough. You look north of the border in Canada, smaller durum crop expected there. I mean, there's a lot production-wise in wheat. There's good SRW, there's good soft red wheat, but on the other side, there's not so good wheat, and there's world problems as well. So I know there's a lot to unpack in this wheat market in general, DuWayne.
Yeah, there sure is. Like you said, grown all around the world, so there's a different story everywhere. I think it's back to the Elgros and the trading platforms that rallied it up sharply. And, maybe Minneapolis wheat had a bit of a story here with a lot of it not looking very good. I think North Dakota has their spring wheat crop tour next week. That'll be fun to follow along to see. I'm hearing different things on spring wheat. If it was planted early, it got in that June heat, which, remember, it's a cool season grass, so it hated that. Those yields don't look very good, but the stuff we've got from guys planting in Grand Forks and up towards the Canadian border who have received the rains say they got a heck of a wheat crop coming because they planted it so late this year because remember all that, God forbid, snow we had that it kind of missed some of the heat, but it's going to be a late harvest there. But back to wheat in general and price direction, obviously a hard pullback today. Overnight, I did read an article that talked about, yes, we've rallied on these headlines that, we're bombing Ukraine, but Russia's still $40 a ton cheaper being offered out there than French wheat. And of course, French wheat's cheaper than our wheat. So do we really have to rally our wheat price here? And the answer is no, and not until we see some export demand. And the exports were pretty poor for wheat this week. They were good for corn and beans, but pretty poor for wheat.
DuWayne, I know we saw a news headline Thursday about India banning some of their rice exports. Do we worry about that story possibly leading to countries seeking more wheat to fill those rations over rice? Is that much of a story? Is it just a short blip headline? What do you think?
I think it was a short blip headline. I really do, because if you remember about a year ago, India was banning wheat exports and then putting them back on and then banning them again. And the trade traded it like the first time and then the second time, not so much. I think they did it 3 times if I remember correctly. So the cash market and basis will tell us what we should be doing. And I'm obviously not a rice trader up here in South Dakota. I probably should as much prevent plant as I have, but yeah, I think it was a blip, short-term deal.
Yeah, I was going to say, not many folks I know are rice traders, maybe some folks down in the Delta, but that's really about it. But just something to keep an eye on, another story, another headline to look at, the world market for sure. Let's go over to livestock, cattle market. We're talking ahead of the cattle on feed, cattle inventory report. Those numbers will impact the trade more Monday, Tuesday, and so on. But feels like the end of the week, a bit of position squaring ahead of those reports, DuWayne.
It sure does. Fundamentally, this market looks good. Box beef, they're trending lower, I guess you could say, but we're still above $300. So I'm not going to call that a poor demand-driven market there. Cash market for the fat steers looks really good. We're up again this week. Trade already happening, like you said, before the cattle on feed report, which is always kind of a bullish sign. I thought the last two key reversals we had on the chart was maybe it, because seasonally we should trend lower this time of year, but Packers just can't find the numbers. So if the cash market is going to keep going higher, well, the futures market is probably going to have to stay elevated as well. Now, yesterday we had another one of those key reversals and the chart looked bad. I'm not really buying it this time, Jesse. I did all the other times thinking that was the high, but cash market was higher again. So as long as the cattle on free report, cattle inventory report isn't a bearish surprise, I think this market rebounds next week again. Demand is strong and we don't have enough supply. Quite simple.
So in that case, I'll ask you this question: If I'm a cattle rancher, am I putting a locket of floor in, getting my hedges in place here, leaving the top side open, or am I locking a floor in and throwing a wish number over top of that and kind of, buy the put, sell the call, whatever the case is there? I know there's a lot of different strategies. I mean, am I leaving the top side open, or am I putting something over the top of myself right now, DuWayne?
No, I think you leave the top side open, but even though I talk bullish the cattle market and how bullish I am the feeder market, because I think corn prices are going down this fall, a put option or the LRP insurance, I think makes a whole lot of sense. I've got guys talking about buying calves this fall, $260, $270, maybe even $300 for them. Even if you can make money feeding them because, say, fats are going to go to 200, which, believe it or not, we're not that far away. Man, that's a lot of investment, Jesse. Just so I buy a put option, even if you think I'm wrong buying it. Nobody wants to waste money, but that is a lot of capital. So please buy some put options just in case that black swan event occurs.
Well, and again, we'll say the risk of trading futures and options, and all that stuff, blah blah blah. We have the disclaimer at the beginning. Yeah, we have that disclaimer at the beginning of the show. We're good. No, we do appreciate the insight and the thoughts there, and always enjoy the thoughts there. Let's talk hogs, DuWayne. Quiet day in hogs. A lot of folks, I think, focused more on that October contract. August, though, still sitting around $100, staying close to that cash index. It looked like we left a gap at the open on Friday in the chart, or maybe that was Thursday.
I think that was Thursday, wasn't it? Yeah, Thursday we gapped a little bit, gap and go, got up to 102. But I think we have to be up here in the August contract. The cash market's white hot, so are cutouts. And, as long as the cattle market stays high in there, I think, the pork production can as well, or pork production. The pork prices can do the same thing. This is going longer, this rally, than most anticipated. It's funny, 2 months ago, we looked at lean hogs were going to zero, it felt like anyway. And now all of a sudden, even China's in there buying some of our pork, and demand domestically is very good. The economy is doing better, at least according to the stock market, right? We got up to some nice levels. It sure sounds like next week you'll see another interest rate hike, and then that's the last one. And just because we're a futures market, they say that's the last one. Everyone thinks we're through this inflation stage and we're going to just run from here. But yeah, so I'm rambling on that. But yeah, hogs higher.
Well, and you think of the inflation stage. That's a good point. Right. That's kind of my other third leg of the stool here is the dollar. We've seen the dollar breaking, stock market. We've been watching the stock market doing its thing. Crude oil's back up around $75 a barrel. Yeah. So these outside markets, and I know we got a Fed meeting coming up here as well. So these outside markets are still at play as well in this whole equation, DuWayne.
Yeah, exactly. You're right. They are, and we're always trying to get a hold in front of them. It's funny. Crude oil, heating oil, diesel fuel, unleaded gas, all that those charts look the same. Bottom left, top right, trending higher, and that kind of has helped the soybean oil market as well. So yeah, maybe there's a higher low to all these grains than I anticipated. Just still would love to see some better export demand for corn, and maybe we'll get there. I think it's just going to take lower prices.
Yeah, definitely. DuWayne, before we let you go, any final thoughts or anything you want to reiterate, drive home to folks here today?
Stay flexible, I guess, on your marketing plan. I don't know how to sum it up anymore. Like I said, a week ago, I was screaming, corn, you need to sell it because it's never going up. And luckily, we sold it on the big spike. So coming down isn't that bad. I look at your spreadsheets. If you're making money, there's nothing wrong with selling.
Definitely. If DuWayne, folks want to reach out to you, get some advice there at Bolt Marketing, what's the best way to reach you?
Yeah, they can call us here directly, 605-448-2365, or they can check us out online at boltmarketingllc.com.
And with that, DuWayne Bosse from Bolt Marketing. Always appreciate the time, my friend. Have a great one. We'll talk to you again soon.
Always fun. Thanks, Jesse.
And that's going to do it for Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.